Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The first quarter accounts for about 10% of their earnings. Yeah. Being a construction giant, it's really the second half which fires. So L&T will find it relatively easy to surprise this street in the first quarter. The only point is L&T results, I think, come after market hours. If it had come during market hours, it would be a sure shot, another reason to expect the market to pole vault to 11,171. But my sense is that we could do it without L&T as well. Yeah. Sheer expectations momentum is so high that my sense is that, it's a question of, I would have normally thought that maybe we would wait a day, but now it looks like, if we can do it pretty quickly. Going by the, look at yesterday's advance declines. Even the advance declines were, I think, 5:1 or 4.5:1. 80% of the market ended higher than the day before, and the day before also was a strong day for mid-caps. It was a 1.3% gain. Yes. So, as you pointed out, Anuj's observation, that it is a very broad-based market.
Yes, I was also looking at the list of 52-week highs and new highs. A lot of consumer durable names coming into that, list now, whether it's Whirlpool, of course, Godrej Consumers has been doing it for a while, VIP, even a lot of IT names, NIT Tech, etc. So looks like there's much more participation than what we've seen over the last few days. The global cues are also good, by the way. Alphabet hit that record high after very good numbers coming in. But let's tell you what our wise experts have to say as we head into trade this morning. Rhythm Desai of Morgan Stanley says small and mid-cap indices are down about 20% this year, begging the question whether they have hit a trough. He says based on depth and breadth indicators, this cohort may be forming a bottom, but valuations are not yet suggesting it is a back up the truck and buy moment. He says they are not anticipating a V-shaped recovery anytime soon in these stocks, unless they get a fresh up move in the large cap index, which is not Morgan Stanley's base case view, given their cautious stance on global equities.
Okay, with that, let's get to the money market views as well. This one comes from Bhaskar Panda of HDFC Bank. Bhaskar says, in the US, the 2-year yield curve punched above the 5-year high and the dollar index still in consolidation stage. He says we may see a range-bound day as far as USD-INR pair is concerned. He expects the USD-INR pair to trade in a range of 68.85, 69.05 for the day. So even if you have VQs coming because of yuan, the fact that equities have started seeing inflows could keep the dollar kind of subdued versus the rupee.
Okay, well, Bhaskar Panda also talks about the 10-year benchmark bond yield. He says that it will remain range-bound within a 7.76 to 7.80% range for the trading day.
And with that, let's move over to Nigel for the world view.
Well, overnight, the US markets did pretty well. You had the Dow that put on nearly around 200 points odd. And in fact, the big gainers included the likes of United Technologies. That came out of the set of numbers. The Street sure did. That stock, in fact, ended higher. And those were the other gainers on the Dow itself. Even on the NASDAQ, you were talking about Alphabet delivering a good set of numbers. In post-market close, the previous trading session, it was up 3.5%. 5% weightage on the NASDAQ. That did well. In fact, it ended with the gain of around 3.5%. And the other couple of names as well, Amazon as well as Facebook, both of them ending at record highs. The problem, though, is that Tesla has asked for money back from some of its suppliers, and that strategy is being questioned, and that's why that stock was under some pressure. We also had, some news that's coming in there from CNBC. The government plans to offer aid to farmers hit by tariffs. We had a tweet coming out of Trump as well on Twitter. He says that the country is great again, and in fact, reiterating what he's been saying over the past. But moving on, then the European markets, they ended with good gains. So sharp gains is what we saw on all the three indices. The auto space did very, very well. And we are talking about Alphabet delivering good numbers. Future delivered a very good set of numbers. That stock was up nearly around 14%. UBS as well up closer around 4% approximately. There's an important meeting today. Trump is meeting with the European Commission president. So the auto stocks will be in focus because they're going to discuss the tariffs that are imposed on either side. PMI as well for the month of July came in. That came in a tad bit lower. Asian markets trading well in the green today, most of them trading in the green. The SGX Nifty, though, indicating a more or less flattish start.
Okay, thanks a lot for that, Nigel. So good earnings and good macro numbers as well. But perhaps the fly in the ointment that I've been saying for the Asian markets is that the Chinese yuan has hit its lowest level against the dollar in 2018. Usually, this could spell a string of depreciation for other Asian currencies as well, many of them competing with China. Ray Faris of Credit Suisse joins us on the phone line. Good morning, Ray. Every time the Chinese yuan depreciates, memories are green about late 2015 and early 2016 when they spelt pell-mell in Asian markets. Do we see an action replay?
Probably not. I mean, I think the circumstances are different today from then. That was an unexpected devaluation, and that sparked quite substantial capital outflow from China. The current situation is different in that this is really a market-driven move in a currency that's allowed to both appreciate and depreciate. Right now, all the flows are for the currency to depreciate. The government is allowing that, albeit in a managed fashion.
Okay. So, Ray, hi, good morning. Is this... So what you're saying is this is a market response to the US-China trade war, because that's what a whole host of experts have also indicated, that this is more active management by the Chinese authorities in response to the trade war. If so, what do you see the trajectory from here?
I would describe it slightly differently. The Chinese are actively managing the currency roughly in line with the direction that sort of market flows push the currency. So in the first 4 months of the year, it appreciated, and the government resisted some of the strength in the currency as they allowed it to appreciate. Now it's depreciating because people are taking money out of the country because of concerns about growth and the like, and they've allowed it to depreciate. Now, they've allowed it to depreciate faster than they allowed it to appreciate. So there's probably a little bit of a trade element to it. But the principle here is this currency is now, roughly speaking, being guided by the direction the market wants to take it. What that means for the future is that for the time being, it will probably continue to soften a bit. Flows are still negative. There's still some degree of concern about Chinese growth and the trade war. But the easing measures the government has taken over the past week, and particularly announced on Monday, should begin to support growth by late September, October. And as growth begins to improve, money growth begins to accelerate, that should be good for Chinese asset markets, and that should begin to pull some money back into China, giving the currency a bit better support. The trade war remains a key uncertainty. An escalation would certainly be bad for the currency, as it would be bad for just about any currency. But the macro fundamentals are going to begin to turn more constructive by the late third quarter to early fourth quarter.
Okay, so what would your, say, end of quarter or end of year yuan level be? And while we are at it, what about the rupee as well?
Well, we've got the yuan appreciating a little bit by the end of the year, going back down to sort of the 660-ish level. That sounds pretty aggressive, but we also have the euro rallying in the second half of the year, and that's extremely important for emerging market currencies in general. The historical rule is that when the dollar weakens against the major currencies, it weakens against the emerging market currencies as well. And that's a big chunk of the way we think about the outlook for the yuan as well as the outlook for the rupee. In the near term, the rupee is going to remain under pressure. And that will probably be part of what ultimately encourages some further interest rate hikes. Deficit currencies are particularly vulnerable right now, and the rupee is a deficit currency. But I would expect it to really kind of cap out a little bit above 69. The worst is over for the current account balance. All the negative seasonality of the second quarter is over, and oil prices seem to have peaked. Inflation should begin to come down into the late second half of the year. Real interest rates go up. The rupee ought to find a bit of stability.
Oh, right. That's good news that you're not expecting too much of chaos. Thank you very much, Ray Faris, for joining us. So yuan is expected to appreciate actually by the end of the year, and the rupee as well tops out a little north of 69, so not a big worry.
Okay, well, I don't think our markets are worried considering the momentum that they are in with the bulls right now. But let's get you some other international news. Pakistan goes to polls today to elect 270 members of the National Assembly and a total of 570 members of 4 provincial assemblies for the next 5-year term. After a campaign overshadowed by concerns of attempted manipulation and violence, nearly 106 million people are registered to vote in the general election, characterized by a heavy presence of extremist parties.
Okay, the PTI party of former cricket star Imran Khan is hoping to beat ex-leader Nawaz Sharif's PMLN in order to hold the elections in a peaceful manner and provide a level playing field, literally, to all stakeholders. Around 770,000 army troops are on duty in and outside the polling stations. Always important for us what the neighbour is doing. Now, of course, all global eyes are also on Pakistan. We'll take a break on that note and we'll come back with markets and more markets. Today is a big day for the markets. We will have our entire research team to detail the top 10 stocks that you should watch out for.
Well, with our markets virtually at all-time highs, the momentum is definitely with the bulls. What are the stocks to watch out for this morning? Our research team is here to give you that very list. Of course, top of mind will be Asian Paints after the really good set of numbers that the company posted. Mangalam, was it only the margins or even the volumes looked very good this time?
Well, the volumes were in line, Sonia. The higher end of expectations, 12 to 13% is what we were expecting. The company did not specifically mention the volumes, but most brokerages have pegged it between 12 to 13% itself. The margins, that was the big positive point from Asian Paints results. So 4,400 crores thereabouts on the top line. The EBITDA came in at 875 odd crores. This compares with our estimates of 824 crores, and the net profit on the back of that beat our estimates by almost 8%. EBITDA margins closer to that 20% mark. Volume growth coming off a low base at 13% is something that the street will be watching out for. The important part going forward is the commentary that the management gave as far as input costs are concerned. The cost of goods sold for the second quarter and their expectations for this year have risen by about 10%. Add to that, the GST rate reduction has made the management cautious on taking a further rate hike because they believe that this may perhaps, attract the attention of the anti-profiteering watchdog. So they have deferred further price hikes. So by that, watching margins going forward is something important. The stock is at a record high. Brokerages have increased some of the target prices, but they still maintain their neutral or hold view on Asian Paints itself. It will be very interesting to see how the stock pans out in today's trading session.
Okay, well, the Jeffries target itself is a good 200 rupees above current levels. But divestment is on in full cry, in full strength. Anisha, Bell on your radar.
Well, yes, Lata, I'm looking at Bharat Electronics because the government is looking to divest 5% stake of the 66% that it holds in the company. Now, they're looking to bring in an OFS and they've floated bids to call in for the merchant bankers to be appointed for this particular transaction. I see it as a bit of dampener because in the near term, it will create an overhang of oversupply, and that's why it might just react a bit negatively.
Okay, Anisha, while on the matter, Anshu yesterday broke the story about NHPC's stake being sold to NTPC. Any views on that?
Well, yes, brokerages have written on it. For example, JP Morgan says that they see very limited business synergies given the fact that NTPC works in the thermal versus NHPC, which is in the hydro sector. They also say that the execution risks are higher in terms of hydro business versus thermal, and the combined entity might actually get a discount because of the NTPC holding in NHPC. Now, the good part is that they say that this will help NTPC to move towards its green energy scenario and increase the renewable sector contribution to around 13-14%, which is right now in single digits, and also the fact that the balance sheet is apt for leveraging more, and if they do a leverage buyout, this can improve the ROEs of the company, as well as the EPS could see a boost of around 7.5%. Though, given the fact that the deal is unlikely to be done in FY19, the overhang and the uncertainty can act as a bit of deterrent for the stock prices in the near term. But overall, they see both positives and negatives. We'll have to see how the exact contours of the deal work out to decisively say how the stock will pan out.
Okay, thanks for that. So limited business synergies and a lot of execution risks. So this one won't go down
plenty of gains
easily.
for the government.
Government itself.
I mean, obviously, the NHPC shares will now be divested to NTPC. that money comes in, LIC money comes in for IDBI, Bell money comes in. I mean, it's really passing on the fiscal deficit to the PSUs.
Well, no surprise, right? They've done this in the past, so we should learn from that. But anyway, moving on, Hexaware also reported its numbers. Reema, how did they look?
Well, Sonia, a one-line summary. Revenues were in line, margins have missed expectations, and it's the higher other income or the forex gain which has driven the company's profitability. So on the revenues, the dollar revenue growth stands at 3.8% in constant currency. It's a growth of 4.7% sequentially. Margins were flat on a quarter-on-quarter basis, and that was a big miss for the market community. The forex gain has driven a profit growth of 14.5% quarter-on-quarter. Now, because of strong growth in Q1 and Q2, the company has upped its full year guidance to 12 to 13% versus an earlier 10 to 12%. But this is already in the price and expected by the street. So most people believe that Hexaware will report a 13% growth for the full year, which is at the upper end of the company's guidance. Now, the stock has rallied 45%. It's expensive, close to 21 times forward multiple. And given the margin miss and no positive surprise in the revenue, there could be a correction in the stock today.
All right, thanks a lot for that. The other big boy that announced numbers yesterday after markets was ICICI Pru. Abhishek?
Well, it's a mixed bag of reports, mixed set of numbers, because the pillars remain strong, but the building is weak. Now, the good part of the results is that value of new business margin continues to improve, and that is at 17.5 versus 16.5 sequentially. The persistency ratio continues to remain healthy. So, the 13-month persistency ratio is at 85.8%. The protection business in the overall business portfolio is increasing, and that is at 8.2 versus 5.7 in the previous quarter. Bad part of the results, the new business premium growth has declined, and it is higher than the decline estimated by analysts on street. The net profit for second consecutive quarter continues its declining trend due to higher OPEX. The annualized premium equivalent fell by 18% YOY, and that was led by saving APE, which fell by about 21%. AUM growth remained muted at just 2.2% on a sequential basis. So analysts on street are bullish. Everyone has a buy on an overweight rating with a target price ranging from 450 to 585.
Okay, so weak PNL and nevertheless a lot of buy calls. Okay, so now the HDFC Bank of the air cooler segment is also slipping a bit. Anisha?
Oh, well, yes, and that is what is not expected of HDFC at all, right? And that's the reason I expect Symphony to see a bit of downtick today. Remember, yesterday as well, it went pretty strong into the numbers, up around 5% at one point of time. So we'll see a bit of dampener. Yes, there was a bit of dampener in terms of the seasonal, unseasonal rains as well. And that's the reason the top line has declined of the company of around 23%. The margins have also dipped by 10 percentage points and come in at 15% versus the street expectation of around 25%. And look at the profits. They have nearly half to 20 crores. The expectations were muted from the brokerages, but nonetheless, this won't be taken well given the India business has declined to 66 crores versus 110 crores last year.
Oh, yes, and once upon a time, a darling of the stock market. Definitely going to be some disappointments here. Thanks, Anisha, for that. Well, what about Team Lee's? Reema, how did it look?
Well, the revenue growth was strong, but the margins have missed expectations. So the company's delivered a 20% growth in the top line. Margins have expanded to nearly 2% versus 1.5%, but this is lower than market expectations. 90% of their revenue comes in from the staffing segment, wherein the company provides temporary or contract laborers to various industries. Now, over there, the margins have declined sequentially for the last 2 quarters. So in Q3, it was 2%. In Q4, it came down to 1.7%. And now this quarter, it's further come down to 1.6%. What Kotak says is there is a possibility that the new contracts the company is signing is coming in at lower pricing, so that would be a headwind. And there has been an improvement in the associate headcount, the number of people it takes on board to staff for the other, to a third party. That has shown an improvement of 6% this quarter, but again, the run rate is lower than what we've seen in the past. So in the red for Team Lee's.
Okay, in the red for Team Lee's. A lot of pharma stocks on our radar as well. Ekta is here to tell us why. Ekta?
Well, a whole spate of US approvals, and that's the reason these stocks would be in focus. Sun Pharma has received approval for 2 drugs. One is an anti-inflammatory drug, naproxen. It's also received approval for a migraine drug, which might interest Lata, so sumatriptan succinate, 85 mg. And Ajanta Pharma has also received approval for another a migraine drug, as well as a drug which is used to manage cholesterol. Cadila Health has received an injection approval for cystic fibrosis, and Aurobindo for allergen, cetirizine capsules. So it's all a normal course of business for many of these companies, but nonetheless, approvals are picking up, so that's always a bit of a sentiment positive.
Okay, thanks for that migraine help. You want to buy? Okay. Oh, we still have some stocks in news that Sonal has a list.
Yes, Lada, I'll start with Ramakrishna Forging. Well, ICRA has revised its long-term rating to stable. Also, the short-term rating has been revised to A2 plus from A1. So that stock will be in focus today. Indo Mines, a small stock, but it has signed an agreement with a Tokyo-based MNC in Japan. And company expects its Japan business to expand and contribute around 30% to the total revenues in next 3 years. I'll be watching out for that stock as well. Now, let's talk about some earnings. KSB Pumps have reported strong set of numbers, majorly led by the strong revenue growth in the pumps business. Also, the valves business has posted an EBIT profit versus a loss last year. All this leading to an EBITDA jump of around 22% on a YOY basis. JSPL also told CNBC TV18 yesterday that it was the lone bidder for global tender floated by Indian Railways, and JSPL is likely to get 20% of the total bids. That stock will be in focus. Borosil Glass also reported good set of numbers. The operating profit margins that expanded by 380 basis points and leading to a profit increase of around 120%. That stock will be in green today. Back to you.
Okay, good numbers coming in from Borosil there. Thanks so much, Sonal, for that. In case you missed out on any of those stocks, here they are. A quick recap. Stocks with positive news flow today. Asian Paints definitely tops the list. Sun Pharma, Ajanta Pharma, Cadila Health, Aurobindo Pharma, Ramakrishna Forgings, Indo Mines, KSB Pumps, Borosil Glass, Music Broadcast and NHPC. While stocks with negative news flow today, NTPC, BEL, Hexaware, ICICI Pru, Symphony and Team Lease. We'll take a short break on that note. On the other side, our technical experts Ashwini Gujral, Sudarshan Sukhani and Mitesh Thakkar will be on our show.